Palantir Technologies has faced a challenging stretch in the stock market during the opening months of 2026. As of the time of this discussion, the company's share price has declined by roughly 12% since the start of the year. That pullback came after a remarkable surge in the stock throughout the previous year, which had pushed the company's valuation to extremely elevated levels and caused investors to question whether such momentum could realistically continue at the same pace. Even though the year began with a noticeable decline, the story has begun to change during the month of March. Over the past several weeks, Palantir's shares have entered what many investors would describe as a recovery phase. In fact, during March alone, the company's stock has climbed by approximately 14%. This rebound has sparked renewed discussion among analysts and investors about what exactly is driving the turnaround and whether the upward movement could continue in the months ahead. A major factor contributing to this renewed momentum appears to be rising geopolitical tensions in the Middle East. Palantir has spent the past several years establishing itself as a powerful force in the world of artificial intelligence-driven software platforms. The company specializes in advanced data analytics, intelligence software, and artificial intelligence solutions that allow governments and corporations to analyze enormous volumes of data in real time. This technological capability has made Palantir an increasingly important partner for both military organizations and commercial enterprises that require high-level decision-making tools. Despite these strengths, the company's stock had recently faced pressure due to concerns surrounding valuation and competition. Additionally, new artificial intelligence competitors have been entering the market at a rapid pace. One of the most talked about emerging rivals has been the artificial intelligence startup Anthropic, which has developed a powerful artificial intelligence model known as Claude. Some investors had previously worried that new artificial intelligence models from companies like Anthropic could eventually challenge Palantir's position in the rapidly evolving artificial intelligence landscape. However, geopolitical developments have begun shifting investor sentiment in a different direction. As tensions in the Middle East continue to escalate, market participants are starting to consider how defense spending and national security priorities might evolve. In periods of geopolitical uncertainty, governments often increase investments in intelligence systems, surveillance capabilities, and advanced defense technologies. These are exactly the types of solutions that Palantir provides. Interestingly, while the technology-heavy Nasdaq Composite Index has remained largely unchanged during the month of March, Palantir's stock has significantly outperformed the broader index. This divergence suggests that investors are beginning to price in the possibility that rising global tensions could create new opportunities for the company's government-related business. Palantir already has a long history of working closely with the United States government. In Q4 of 2025, approximately 40% of the company's total revenue came from government contracts within the United States. Even more impressive is the growth rate of that segment. Government revenue during that quarter increased by 66% year over year compared with the same period the previous year. Such a sharp increase highlights how quickly Palantir's technology is being adopted within government agencies and military organizations. Over the years, Palantir has secured numerous agreements with several branches of the United States military. The company's software platforms are currently used by the United States Army, the United States Navy, and the United States Air Force. These platforms help military personnel process massive volumes of intelligence data, coordinate complex operations, and improve strategic decision-making in real time. In modern warfare, the ability to analyze data quickly can often make the difference between success and failure in critical operations. With tensions now rising in the Middle East, many analysts believe that the demand for Palantir's technology could increase even further. Military organizations may accelerate the deployment of advanced data analysis systems in order to better monitor evolving situations and respond more quickly to potential threats. Because of this environment, some investors believe that the $10 billion agreement with the United States Army could gradually translate into larger revenue contributions for Palantir as the contract continues to be implemented over time. Analysts at the institutional brokerage firm Rosenblatt Securities have recently weighed in on this possibility. According to their analysis, Palantir's pipeline of potential government contracts could become stronger as geopolitical tensions remain elevated. In response to this outlook, Rosenblatt Securities analysts increased their price target for Palantir shares from $150 to $200. This revised target implies potential upside of approximately 27% compared with the stock's recent trading levels. While the possibility of increased government government demand has certainly captured investor attention, it is also important to recognize that Palantir's commercial business is performing extremely well. The company has spent years building its reputation among corporate clients, offering artificial intelligence platforms that help businesses manage complex data systems, streamline operations, and make more informed strategic decisions. During Q4 of 2025, Palantir reported a remarkable surge in revenue from its commercial segment. Commercial revenue increased by 82% year over year during that quarter. This segment accounted for approximately 48% of the company's total revenue, demonstrating that Palantir is no longer dependent solely on government contracts for growth. Another important indicator of the company's commercial success is the rapid expansion of its customer base. During Q4 alone, Palantir added slightly more than 200 new commercial clients. This increase reflects growing interest from corporations that want to integrate artificial intelligence-driven analytics into their operations. Businesses across industries are increasingly realizing that data-driven decision-making can significantly improve efficiency, reduce costs, and uncover new opportunities for growth. What makes this growth particularly significant is the way Palantir typically builds relationships with its customers. In many cases, companies begin by adopting a relatively small portion of Palantir's software platform. Over time, as they become more familiar with the system and recognize its value, they often expand the scope of their agreements. This gradual expansion can lead to much larger contracts as organizations deploy Palantir's technology across multiple departments or operational divisions. Because of this dynamic, a rising number of customers today could translate into substantially larger revenue streams in the future. Each new customer relationship represents a potential long-term partnership that may grow in value as the client increases its reliance on Palantir's software ecosystem. Looking ahead, the company is expecting strong growth to continue throughout 2026. Management anticipates that total revenue could rise by approximately 60% during the year. If this estimate proves accurate, it would represent an acceleration compared with the 56% revenue expansion achieved during the previous year. Wall Street analysts are also forecasting impressive growth in profitability. Current estimates suggest that Palantir's earnings could increase by roughly 76% during the year. Such a large jump in earnings would reflect the company's ability to scale its business while maintaining strong demand for its artificial intelligence platforms. Given the powerful momentum in both the commercial and government segments, there is a realistic possibility that Palantir could exceed these expectations. If revenue and earnings ultimately surpass analyst forecasts, the company's stock could continue to benefit from renewed investor enthusiasm. Nevertheless, investors should remain mindful of one critical factor, which is valuation. Even after the recent pullback earlier in the year, Palantir shares are still trading at approximately 130 times forward earnings. This level places the company among the most expensive stocks in the technology sector when measured by traditional valuation metrics. A premium valuation is not necessarily a problem if the underlying business continues delivering exceptional growth. However, maintaining such a high multiple requires the company to consistently outperform expectations. If revenue growth slows or earnings fail to meet analyst estimates, the stock could face renewed pressure from investors who are unwilling to pay such elevated prices. On the other hand, if Palantir continues expanding its customer base, securing additional government contracts, and strengthening its position within the artificial intelligence industry, the company could potentially justify its valuation over time. The next several quarters will likely play a crucial role in determining whether the recent rally represents the beginning of a longer-term uptrend or simply a temporary recovery within a volatile market environment. For now, Palantir stands at the intersection of several powerful trends. Rapid advances in artificial intelligence technology, rising geopolitical tensions, and increasing demand for data-driven decision-making systems are all shaping the company's future prospects. Whether these forces ultimately translate into sustained stock market gains will depend largely on Palantir's ability to execute its strategy and continue delivering strong financial results. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.